coming on. I'm coming back. Are we back now? There we are. We're back on the air. How's everyone doing out there? I hope I'm going out to now the webinar and now to the site. I'm being right. Is that correct now, Jesse? We're live, right, on the webinar?
All right. Yes.
Okay. Hey, well, welcome.
Yeah.
Thank you very much, Jesse from Speed Trader. I got my screen up here. I hope everyone had a good day today. My name is John Carisco. A lot of people know me as DayTraderRockStar from Day Trading Radio, where I do a live market broadcast of the markets. And I've been doing this, the broadcast from probably going on 4 or 5 years now. I've been trading since '92. And you know, I've done a few of these webinars, and I love the education portion of the education portion of trading more than anything, because over the years I've developed different styles of different methodologies that really take the risk out of trading. And so when Jesse and Speed Trader asked me to do this webinar, I thought it was a great time to really concentrate back on some of the you know, people can't be in the markets like we are every day. You know, as a trader who trades for a living, is in there working every day. But some people out there want to be part of the markets, but they have a job or they have other responsibilities. So, you know, maybe you're not able to get to the you know, trade the markets you know, every day, but you're able to access them maybe 2 or 3 times a day. So I kind of wanted to do a little description of how I set up for that, because I think that's a very profitable way of trading. And I use it all the time. You know, I use it because we send, you know, I send out a watch list, and that's one of the core things we're going to talk about, is how to develop that watch list as a focus list to kind of rotate in each week. That way you're not focus on it every single day, but every Saturday, Sunday, you can do your research and you can find the stocks that are set up to move. So that's why I call this creating a trading plan for part-time traders. Now, I'm just going to roll through here. And I know that the webinar, they allow you to ask questions and stuff, so I guess you could ask questions in the room. We try to get to them. I'm not going to really, let's see. I'm not going to look at the chat room because I don't want to be distracted, because we're broadcasting live all over the place now. So I want to just start off here, and I hope you guys enjoy this. All right, here's one of the things that, you know, as a trader entering the market, we just take a look at what we have here. It's just a chart. This is actually a chart from Vulcan Materials. We actually traded that today, and the average trader, a new trader, or maybe not an experienced trader, will see a pattern like this, and you know, and you try to determine if you should buy or to sell, and you read all the books, and one book could tell you one thing, and another book could tell you another thing. But the reality is, you know, most of the time you're following the crowd. And when you follow the crowd in any market condition, you set yourself up to be, you know, taken out with the crowd. So, you know, what I like to do, and this is, you know, just kind of the basis of what I like to do, is kind of organize my trading, in a way where it, you know, I could actually see these market moves set up before they happen. It's kind of like not predicting the market, but what I call I had a good actually, we're going to talk more about it, but what I call pattern forecasting, pattern recognition and pattern forecasting, being able to predict a pattern before it happens. And when you have a pattern that plays out every few days, it's perfect for someone who's in the market just a few days a week, because they don't have to worry about watching it every day. So again, as a part-time trader, these are, you know, this is actually good for people to trade 2 to 3 times a week at the most. Get the biggest bang in the shortest amount of time. And that happens because you have we have a set of indicators that we're looking at, and they all line up at the same time, giving us the biggest possibility of that push. And again, that's also waiting for that opportunity, puts us in the lowest risk trade, giving us the highest reward. So we're going to talk about, you know, where do we get these stocks to trade? And the first thing is developing a focus list each week. And I don't want to have a focus list that I'm trying to find new stocks each week. I want to have a set of stocks that I rotate through each week, so it's not a big deal. So I kind of recommend between 20 and 50 stocks that you could rotate through. And when you rotate through those, you know, scan them, just visually scan them. Start with the daily chart patterns, and then break it down to the 60-minute chart patterns. And between those two patterns, you're really going to get a nice viewpoint of the upcoming week based on the set of indicators I'm going to show you in the patterns. The type of stock should be quality companies, and I kind of always talk about quality before anything else, because you want to be in a stock that institutions are looking at, investment firms are looking, stocks that kind of move and get good ratings, profitable companies, anything that you feel good about. I try to stick with stocks over $20 or higher in price. And again, the stocks should come from a major index: S&P 500, the Dow 30, NASDAQ 100, even the Russell. So you want to, again, have your stock. You have so many stocks to choose from. You want to probably stay away from the stocks that are penny stocks, stocks that are trading at $5, stocks that are, that tempt you to get in because you have a dream of the stock doubling or tripling. You think, well, because I only have a small amount of cash, I could buy a lot more of this cheap stock, and then it doesn't work out that way. And that's where all the those small accounts get wiped out, is on the cheap stocks. And again, you want to have a well-diverse list, giving a nice snapshot of all sectors. So what I usually use, some of the tools I use to find these things, is finviz.com, and I was actually going to show you a let's see if I could actually bring over a picture of the Finviz setup here. Let me go out of here for a second and bring you a Finviz, FINVIZ.com. I think you can still see my screen. And this is a great little site. And again, just wanted to touch base on this, because this is what we call a market snapshot, or a sector map, and it kind of breaks down the market into the different sectors: technology, services, basic materials, financials, consumer goods, industrial goods, healthcare, utilities, conglomerates. And it really gives you a good snapshot of the market. So you could take a few stocks from each one of these just to make a basis for your watch list. Take 3 or 4 stocks from each sector, 4 stocks, kind of have best of breed, and then you have a nice rotation, a nice little group of stocks that you could rotate, and do your research through. Just the research is going to composed of, actually looking at the patterns, which we're going to go into right now. But this is a great place to get your really get that information from. All right, IB50, Investors Business Daily 50. That's you could actually see that on the investors.com site. Excellent resource for stocks. Personal scans, if you have any scans, or of course my 10 for 1,000 watch list. That's how I base my 10 for 1,000 watch list that I work off of each week. So it's basically, have different ways of finding these areas. And then from that point, you start your scanning process. Now, the thing I wanted to actually talk about today is actually I've been working on a new set of indicators. And this timing of this indicator, normally I use full stochastics at 14.33 as the parameter, 3 smoothing pattern. But this stochastic indicator right here is still the 14. It's actually the 14.46, and I've used this a lot back testing, using it with the 60-minute chart, and I find I get a better signal or less false signals on the stochastic. So you're going to start seeing me use the 14.66, which is giving me a nice crossover. So if I actually look back at a recognizable pattern. And again, these are just the basics of pattern recognition, is being able to recognize a pattern and see and matching up, not getting too overwhelmed by all the indicators, but what you have is just a standard pattern that you find in nature, something that comes up to an area of support, and bounces off to an area of resistance, back down, but continues to stay in a pattern, a recognizable pattern. And when we see that recognizable pattern, we recognize that the momentum is going down and coming up and going down and coming up, and that means that the market is trending. This is actually a trending stock, and you recognize. So once again, and this is based off the 1, 2, 3 pattern, which is something that you know, it's a technique to establish this pattern before it even happens, and we're going to go more into that in a little bit. But right now I'm just talking about that 1446 stochastics, and what I use it for is I definitely use that 2080 oversold, overbought line, but I would not, you know, just again as a momentum indicator, you want to have an established trend line. In this case, you have the established top channel line. From that point on, if you're always working with channels, you just draw that, you know, you draw a parallel line that kind of represents the recent lows. This is a gap down, so this is something, a rule that I use in chart building, that you don't usually count the lower part of the gap if it comes right back up and there's a better spot right here to use. Again, you see it come back down here and test that low level, and you come back down here and test the level again. Again, gap down, close back above it during that day. So you actually really recognize that channel. And with that channel, you know, in the channel, you could see that the stochastics made a lower low. Stochastics made a lower low, or made a low here. Price level made a lower low. Stochastics low, price level lower low. And we pulled right back up and stayed within the pattern, pushed right up there. But all of a sudden we got a nice pullback, and we pulled back into an oversold stochastics. And we could see that the price level is holding way off the recent lows. Now this is, you know, this is something I preach every day in the markets. And this is something you can see on your 60-minute charts. And when you deal with a 60-minute chart, you're looking at a pattern that plays out over a course of 10 to 12 days. So you might have every 10 days you might have a setup like this. You know, 10 days ago you had a setup. Then 10 days later you had a setup. 9/12, September 12th, setup. 9/22, setup. 10 days. Look at that. October 3rd, 4th, setup. So all of a sudden you're starting to map out a trade, and you're saying, all right, I'm going to be prepared for this. I have my oversold stochastics. I have a recognizable channel. I have a lower trend line support. Now you got that bounce. Here's your first trade right here. Now, what's great about trading channels, downward channels break to the upside, upward channels break to the downside. How do you calculate a downward channel break? You look for a stochastic divergence, which is price stochastic divergence. The price continues to make lower lows. The stochastics continue to make lows. Now the stochastics made lows, and the price are holding way off of here. That's your signal that the market's going to break higher. So that's your, you know, once you get into the oversold level, it's your highest probability trade right now to take that. You know, that's what we're in the markets for. You know, if someone could tell you, you know, scientifically that this has happened over and over again, and we see this type of action, the majority of times the market moves up there. Take it, there's no news that comes out to affect it otherwise. This is the closest you're going to get to a formula that works all the time in the market. It's just a matter of recognizing it when it's happening, and it happens for a reason. You don't get the oversold stochastics, you know, and the price holding up this high unless it meant something, you know, because normally it's been, you know, the stochastics momentum would drive the stock down. So this is telling you something right now, and it's up to you to recognize that and trade it to the upside. And this is what you just want to scan for. You want to take this as an example. Take it with you as an example and use it, you know. So I'm doing my scans, and maybe for some reason I find this stock APH, and I'm like, well, here's a recognizable channel, but the stochastics haven't pulled back enough yet. You know, it's in a process. So this is perfect. I know that during the week I want to watch this, wait until I get oversold here. Once we get oversold, we're going to look for that kick back up, and we're probably going to see a little pullback here, and then we're going to see a move back up. And this is a stock from yesterday, and it's funny because you know, here is a great established trend line on top. You can recognize the pattern. You know, you can even see the oversold levels. And you get, again, you can see the different width of the stochastics. You can see the crossovers now a little bit clearer, and you see that 20 point. Now each point that, you know, we break higher above that 20 point, we're coming from an oversold level and starting the momentum up. Each time we break through that level and we're corresponding on a lower trend line, that's a high probability setup. You know, that's a very high probability setup. Again, it happens over and over again. So why wouldn't you pay attention to it once it comes down to that? Now I just want to bring you up I want to go back out here. I'll just APH, just as an example, because I wrote this one yesterday. I made this chart up yesterday, and I'm just going to go back and look at APH right now, just fast for you. This is today's market. All right, let's zoom out here. This is exactly what you were just looking at here. And look at that pullback. It broke down here right to the 50-period moving average, and we got that pullback in the stochastic. So that was exactly what we were looking at to happen. I get a better view there. And that's exactly what happened. We got that bounce. So right when we got back down into that 20 range, and we're holding that 20-period moving average, even though we started turning back up, right when you see that crossover, you probably could have gotten it yesterday. I mean, these are things that you have to recognize before it happens. I mean, you know, it's okay to recognize it after the fact. You know, you're trading here and like, oh man, I should have got in here. But you know what? Seeing a stock here and knowing that this level is down here, that's great, because all you have to do now is wait for that level to show up. And the same thing, you know, once you get back up to a level and you get an oversold, you know, you get a rotation, you know, all you have to do is wait for that to pull back and go long. So it's giving you multiple entries of a stock. But as long as you have this stock as a stock that you continue to look at each week, because maybe one week it's not going to be set up, and one week it will be set up. Let me jump back over here for a second. I want to continue from my current slide. Sometimes you can hear. Sometimes I get very passionate, and I love talking about trading, because it's a science to me. You know, it really is something that that you can start to really see action in the stocks. And I think the hardest part as being a successful trader is the discipline and the confidence to come with trading, the discipline to take your positions and take your profits, you know, and the discipline to kind of manage your emotions. Yeah, an emotional part of trading will be the downfall of many traders. The patience of letting things set up, you know, and letting the market come to you instead of chasing the market. You know, you're always going to have a better probability if you know, and this is, you know, this goes against some people, but the truth is, you know, a lot of people, you read in a lot of books, they said, well, buying on momentum and buying on the breakout is, you know, that's the way to trade. Well, you know, how many times have you seen a stock break out to new highs in reverse and trap so many people up there? It's just, that's what it is. So again, just as another example of BTU, I just want to go mention once again, the stochastics, my #1 indicator to use with pattern recognition. And the daily full stochastics, I continue to trade off of the 1433. The 60-minute chart, 1446. You can see the tightness of the daily stochastics here. And again, this is a recognizable pattern on BTU on the daily. And again, we picked up BTU, you know, last week, right off the lower trend line. Why? Because it was an established trend line. We were oversold on the stochastics. It was an easy call. You know, it felt comfortable. Everyone took 3 points profit in that. You know, why wouldn't you take that setup? Why do traders try to make things more difficult than they are? You know, it's like you go into a casino and you're you know, you just have to play the game because you're there. Well, you know, this game wasn't ready to be played except right here, and that's a high probability setup. And if you can recognize those before they happen, that's key. That's key to survival in the markets. We all know the markets are hard. You know, it's you can say everything we want. And again, here's the what I call stochastic channel synchronicity. Now, synchronicity is an interesting word. Go try to find the history of synchronicity. It has a lot to do with science and not just random. A lot of people say random things. Synchronicity happens because you know, whatever laws of the universe, however you want to define them, you know, relative theories of quantum physics and continuum time theories. I couldn't even get into it, but what I know is what I see all the time. All right, so it's like you see the area here; it's very established. You see the oversold stochastics. Bingo! You see the move off it time and time again. All right, we're going down to again. We're breaking down the Peabody here one more time on the 60-minute chart. And like I said, you can look at the daily charts, and you see a daily chart like this, and I said, well, I don't want to take a trade here in July, and then take another trade here in September. No, I want to be a little more active in the markets. All right, these areas that are pointing themselves out on here are very specific, great levels for longer-term trades. You know, long term. Now we're going to go to the 60-minute chart. 60-minute chart is going to give us basically the same pattern, but we're going to see the rotation of the stochastics happen on a faster time frame. The rules still apply. If I extended this out, this would be a kind of a wedge pattern. Each time the stochastics pulled back into an oversold level, we continue to push down here, and we got a fast pullback. But this again, here's the same type of setup. It's called positive price stochastic divergence, where we pulled back oversold quickly, and we knew that we're probably going to break out of this channel. So BTU is a good setup going forward still. But this is, again, you could take these, not have to wait 3 months. You might have to wait 10 days. But then again, if you have 10 days to wait and you have 50 stocks and you have 3 of those stocks set up one day and maybe 4 stocks set up another day and maybe 15 stocks set up another day, you're always going to have you're always going to have setups as long as you continue to to do your research. All right, let's see what else we have. Lots of times I'll do a scan and I'll come up to a recognizable pattern. And again, a recognizable pattern, I'm going to show you how to define that. Looking at the daily stochastics versus the pattern. Very simple to see the pattern. You can see that now looking back at this, and it's like, wow, Philip Morris, oversold stochastics, lower trend line, recognizable trend line, 1, 2, 3, pivots, extend that line down. You probably want to buy there if you were there at the time. Like I said, it's about being in the right stock at the right time or seeing it in front of your face. There's thousands of stocks out there, so how do you know that this one's hidden at this time? Because it is a good setup. But now it's extended. The stochastics, the momentum is still heading up, but it's in no man's land. So this is something that if I do a scan and I recognize this, put it in your watch list. Write it down. Because this will pay you money down the road. The next time it comes down here, maybe it's 2 weeks from now. It'll give you a nice little reward if you could pay attention to it, remember it. That's how organized you have to be as a trader. Should be a business where you just rotate your stocks into different categories. You have wedges, and bottoms, W patterns, channels, and then put your stocks into folders, whatever charting packages are you using. You just kind of put those stocks in there and be more organized in your research. And then it's easier enough to identify these. I think, and maybe it's just me, but I always feel like, sometimes you go into the market unprepared. The market's coming at you a million miles an hour. You don't know which way is up or down, and you just get chopped up. Anytime I do, and I talk about this, anytime I do the extra effort, go the extra mile, do an extra research video, do an extra scan at night, and I have my stocks listed, I know exactly what's going to move up. I feel comfortable, and I throw them in the room. I said, all right, watch Safeway today. We're going to run to $18. I mean, it's because you gain that confidence by doing it and being on top of it before it happens. You never want to chase the stock. All right, so I see some questions in here. I hope this thing is going on. It is. All right. I haven't even looked. You guys hear me okay? If you guys throw it in the question room. If you guys hear me okay. I just want to make sure. Yes. Good. Thanks, RS. Couple questions. Do you have a preference on stochastic settings for daily or the 15 minutes? 14.33 on the daily. I just started, using the 14.46 as a 60-minute one because, and I want to go over it a little bit more in a little bit because it gives me a special safety catch on it. Let's see if I could actually go back on here. Here's Philip Morris again. Let's just go back on Philip Morris. All right, here's PM on the daily. All right, here's the daily. And I said, oh, we recognize that. Here's Philip Morris on his 60-minute chart. All right. Now I ended up keeping my stochastics on 14.33 on this one, which should be 14.46. But what I wanted to show you here is basically how you could see that pattern really developing on a faster time frame. We know that we have 1, 2, 3 areas. 3 areas. You draw a trend line from 1, 2. You extend that all the way out. That's an established line. That's a rule. That's a law of a line. 2 points make a line. You extend it out. That line is always going to be there. As long as you have another pivot area or an area above that's changing of trend, this always happens at a change of a trend, then you could take that line and just make a parallel line. So even if you were going into this and you only had these 3 points and you had this line, you know that once you get back up to this level and you have an overbought stochastic area, this is going to work out. You know, it works out more than it doesn't by a long shot. I always say the technicals are great until they're not, and one of the reasons they're not great is sometimes outside influence, news, events could, you know, skewer things up, and that's the only thing you have to risk when I use technicals. It's just, you know, the areas are set up here, you know, it's just about having the confidence to take them. And then this place comes into play. So no matter, as long as you recognize this level and you pulled back and you came back and tested and you kept on getting the signals, you know, there's no reason really to mess with this stock. And, you know, but if it comes down here, you have a really good aggressive level. And again, now it's midpoint back. If we came back down here again, I would take it one more time. And you can see on the 60-minute chart, we're starting to pull around. And this is just from yesterday, so I haven't even checked today's. And I go back, you know, someone's asking, how far do I go back? Well, when I do a scan, let's just bring up a scan for a second. Hope you guys could see something like this. Let's just do something like I'm doing. This is, you know what's great about this, guys? And for those out there maybe never heard of me or, you know, never seen this type of trading, you know, what's really cool about this is that I do this all day long. You know, this is what I do. I love doing this. It doesn't seem like all of a sudden it's a webinar, but it's not a webinar for me. It's doing something that I think is so important for you guys to grab onto and take with you. And you know, I could answer all these questions all night long if you have them. So I wouldn't mind even, you know, taking a look at some ways of scanning. All right, let's just take a look at one stock we just recently got into. And this is, a lot of this stuff is just off of my, you can see Sony. Here's Sony. Here's a stock that is very organized, you know, very organized pullback, very organized pullback, oversold. You can see that, you know, you can really see how we're coiling up. We're into a wedge pattern. Each time we got down to the oversold stochastics on the 60-minute chart, it was just a screaming buy signal. Here we got the divergence between the double bottom, and there we had the breakout. But I always start with the daily chart, and I don't go out, you know, go out as far as you feel like you should. You know, I sometimes go out about 6, 7, 8 months. I don't go out, I don't look at the weekly chart as much. I don't look at the, you know, I kind of concentrate on the daily. If I see a pattern on the daily like this, then I break it down. I said, well, it's very tightly wound up here. The stochastics are setting up. They're kind of coiled stochastics. You're going to look for that break to the upside. So you establish that position. So we're looking back six months, not that far back. Let's go. Just want to bring up the bring it back up to Philip Morris. We're going to go on here. All right. So the real key to this, I think, is identifying the channel before it happens. If you can identify a channel before it happens, it's your, you know, it's half, like I said, when you're on the right side of the market, half the job is done. If you can identify a channel before it happens, that's, you know, the other half. And what I do is what I call is the 1, 2, 3 pattern, you know, and I've recognized when you have a change of trend, you have usually a high or representation of a change of trend. If it's a right shoulder, or a head and shoulder, or a breakdown, it's a lower low. But once you start establish that pivot area, and it's really called a pivot, it's, you know, you have a pivot that changes stock direction as a pivot. So from a stock that's coming down to a stock that's, you know, moving back up is a pivot, and a stock that's moving up to a stock that's moving down. And that's a change of trend. So usually you take that low part of the reversal and the high part of the reversal. And then once it establishes the next point, or you see a reaction, another pivot, that's your third pivot in there, then you could just adapt that and throw down that fourth one. And even if you find that sometimes the pivots don't come into play, if you do see 1, 2, 3, 4, I make it a kind of a rule to trade 5 automatically. And if you get the setup with the stochastics and a 5, you know, all you have to do is just recognize the 1, 2, 3, and then you trade 4 and 5, possibly 6. You know, that's what we're looking for: 1, 2, 3 to 4 to 5. But you don't, and the safety zone here is, having the stochastic set up, because that's the change in momentum, and having a combination of the momentum changing off of a, positive channel like this, lower channel. First of all, we're taking the risk out by buying the drop. We're buying into weakness. All right. We're also buying on support, so we have a better chance of getting a pop there. So there's a lot of different things working for us here. A lot of people say, well, you don't want to catch a falling knife. Well, I know where we're going to go. I pretty much know that we have a good shot of popping here. Sometimes if you break down through or watch for the reversal candlestick and it even confirms it more, you get a little flush and you sometimes see the candlestick close back above the line. That's even a better tell for that pattern. But most likely you could trade off of this level, especially if it's stochastics. And if it does break down, that's your stop. You'll recognize if this is not right. And if something's not right, then you recognize it. Dear 60-minute chart. I don't know what I was looking at there. Here's another example on Sony. Sony, we got into this stock this week. It was basically one of the best setups I've seen in a long time. Again, here's your 1, 2, 3 pattern. 1, 2, 3. Here's 4, 5. And here you have a reversal and a pullback in the stochastics, and you can see the divergence. And we talk about a stock that's in a slightly downtrending stock. So you're making lower lows and lower highs, and that's the trend. And with that, you have the corresponding, because stochastics are range bound from 100 to 0, you can't go to negative and you can't go above 100. So once you get down to, underneath 20, you're considered oversold, and above 80, considered overbought. So I want to see that oversold indicator lining up with 4 and 5, overbought and oversold. And once I have that lined up, once we get that crossover, now we have a better high probability trade right here to the upside. But this was really key, seeing the pullback in the stochastics, but we're holding off of recent lows. That was really key for that pop, and we continue to pop today. I think we closed up $20 and change. So that's a great setup on Sony. Something I call building the trade. And again, for those out there, when you come out of a pattern, lots of times, or out of a base, I should say, a break of a pattern, downward channel, or a break of a base, that lower portion, I have to actually show you on a better. Let me see if I can bring this up. This is on the 60-minute chart. Let me see if I can bring this up on my my charts here. WFC. All right, this is WFC. This is what we've been trading the last couple days, and called for this one to power forward today, lead this market higher, and that's exactly what it did. But you can see, you recognize that daily chart, and that's kind of look very choppy. But once you break it down to the 60-minute chart, you start to see a better way of it. Now, this is what I was looking at. Once you see a kind of a channel break, and this is not the best example because this is more of a channel base here, but you did break out of that base and start heading up. So technically, normally what I look is a downtrending thing, and once you get that breakout, then you look for a new channel to develop. So what you do is you have a base, and that last low into that base, the last time you had a low in that base, that's an important level, and the last high in that base, be it a downward trending high and a downward trending low, usually these 2 points are going to start playing out in the stock pattern. So we're going to remember those 2 points, and now you're trying to measure out again the next trend. So you want to be on top of this. So you follow the stochastics up, you wait for the pullback, and you start to see this. So once you start, you're giving this some time. This is on the 60-minute chart. You see this might start pulling back. Whenever it happens. Remember, we're still in search of our third pivot. We already have 2 pivots, and this is called building the chart out. So once I determine that we had this breakout, now we have our pivot area, then I could start saying, all right, well, let me get rid of this. Sorry. Now I have this set up here, right here. And I want to say, all right, now I have this set up here. So I'm looking for now, my next trade opportunity is going to be here. Wherever this thing comes down and eventually meets it. Or do we get a rotation back down here on the stochastics and we're holding off for recent highs, which we will, because this is basically telling us this is a new trend. So we're just now, we already established a trend change. All we have to do is let these things set up. Again, perfect for the shorter term, that kind of part-time trader, because you can recognize this on a Thursday, come back to it next Wednesday and say, oh, you know what, this is set up perfectly now. Johnny was right. It moved around, but eventually it's back down here, and let's see how it reacts. Or look, this is the stochastics are pulled back, they're starting to turn up. Hey, he's right on this. And if I'm right, and this starts to bounce off of this level, you still have plenty of time to get in, because this pattern is going to start to play out. Because this is a great stock to pattern out. So this is really a great technique, and unless you've done it so many times, you might not even recognize that the new pattern's starting, because you don't have that. Most people will say, ooh, look, we pushed back down here and we pushed up here, and they're going to say, oh, look, a channel. Well, yeah. Tell me it was a channel here where I could have profited, and that's what I'm going to do. I'm going to tell you this is where the channel is going to develop. This is where you want to be in. I don't want to know it way up here when I can look back at it. So, watch the momentum, watch the trend lines, textbook stuff, 60-minute chart. Let's move on. I think I'm talking too fast. I was a little tired yesterday, and I ended up Dolly brought me a triple espresso. Yeah. No more. That's awful. I'm glad I did that on the webinar. It puts the professional touch on this, Jesse. All right, so that's building the trade. WHR, Whirlpool, nice action today. Warren Buffett wants to buy a dishwasher, I heard. Anyway, again, I just want to show you, when you do see a 60-minute stochastic, what I call a divergence, or price stochastic divergence, where we get a quick retracement back into the oversold level, but the price holds way off the high, and this is after a channel trade. All of a sudden, we have this new channel developing. If I drew these lines here, it's on an image, so I can't draw that line here. But this one, moved up today. I think it moved up to about $59, and you could probably take this trend line and move it right up to here, and you're going to have a parallel trend line right up to there. I'll do it with you right now. But what we had, again, that was a great entry right there. Oversold stochastics, pull back. You knew it was going to move higher just based off the trend there. Let's take a look at Whirlpool live. We'll get dangerous here. Let's take a look at Whirlpool live and see if we can actually build that chart out. WHR. Now WHR had some aggressive action today, so that looks really sweet. This looks really nice. So now what I'm recognizing when I look at a chart like this, and I said, all right, I'm going to zoom all the way out, and I'm looking at it, and I'm saying, all right, what can I tell of this stock? Well, definitely it has an pretty established downward trend line, and it's kind of a wedge pattern channel. It could probably go out a little bit further. It's not, but we did definitely get a breakout here. And actually, let me put this as a parallel trend line. I'd rather use the channel line than anything, but sometimes there's wedges form in this market also. But actually, this looks like a perfect channel. You see how we came up to that channel and pulled back before we exploded higher? So that was a good tell, and that was the 1, 2, 3 method too. I used to always be a big fan of wedge patterns, but I always found out the wedge patterns, when they attempted to break out, you thought you were in the money, but they stopped short real fast, and they're actually just moving up to the top part of the channels. So, lots of times you see that wedge pattern, and you're like, oh, this is a wedge. I've heard that wedges break out, the distance of the wedge, it's going to pop up. Well, lots of times, that doesn't happen. What happens is, and I've traded, and this is a really good, here's your wedge pattern. What happens is, this ends up becoming your target, the channel, the formation of the channel. It's just like this possibly might have been the wedge pattern. If you recognize that and oh man, a perfect wedge, it is. But your target is the channel line. So you see that target, how that came into play. If you saw a wedge pattern, you say, where's my target? Well, draw that 1, 2, 3 pattern, extend that down, pushed right up against it, pulled back. We got oversold stochastics. This was perfect. Overbought stochastics, top of the trend line. Perfect for the pullback. But the quickness of the reversal here, of the momentum shifting real fast to oversold, yet the price never pulled back under the 50, told us something. It definitely told you something, that there was more strength here. And now that all these lines are in place, now you can start building this chart out a little bit further, and the next thing you know, you're going to be ready for the next move. So, you know, you're already starting to pull back. We have, you know, this possibility right here playing out. If we start to come down here, always pay attention to that recent low in the market. So this is going to be another good entry down here in that 53 level. As long as this comes down and the timing is there. You want oversold stochastics, price level right back down here, and great area for a bounce. So that's, you know, you can see that happening. That's how things work. All right, let's go to the next slide. Current slide. All right, that's weakness. All right, so quality stocks plus multiple indicator setups equal high probability setups. High probability setups are what you want to be in. That's, you know, again, you want to be in something that's is recognizable, that you see something that happens over and over again. You know, it's all about the patience of letting these things happen, not getting too involved, not chasing things, not you know, not believing everything you read in the book and not believing everything you hear on TV. Learn your price stochastic divergence. One of the most reliable signals I trade off of. All right, trend line and pattern forecasting. The 1, 2, 3 method is golden. You know, once you have 3 points, you could trade off of 4, 5, and 6. So all these little techniques are enable you you don't have to be in the market 24 hours. All you need to be in the market is when those signals line up, and they usually line up every 10 days, 7 to 10 days. So imagine, you know, not having to stress yourself out. You have, you know, I always tell you, this is a great little system to teach your grandmother to trade like this. 60-minute chart, full stochastics, 1446. I'll probably talk more about that tomorrow on my show too, because I wanted to go more into that, but I think I'm getting burnt out here, and that's it. I think that's it for today. Let me see if there's any questions. Let me actually see if there's any questions. Which EMAs do you value the most? I think the EMA. Hey Bob, Screen Tan in the house. Exponential moving averages, I use them over the simple moving averages, and I find that different chart time frames, you know, react to different time frames on the moving averages. So you know, I love a bullish market where they pull back to the 20-period moving average on the 5-minute chart. I love that. On any type of smackdown, early morning selling, the 200-period moving average is a great place to really watch. I really use the 20, 50, and 200. Just standard. Every time you see one of my charts, I use them. I use the pivot areas, pivot points, the floor pivots as a secondary indicator. But really, if I were to name my 5 indicators that I use, you know, stochastics are number 1. All right, 1433, 1446 on the 60. All right, trend lines, absolutely. Trend lines and stochastics, that's the 1-2 punch. All right, you have the right time frame, 60-minute charts. Stochastics are lined up on a lower channel line or a trend line. It's golden. Recognizable patterns is what I call an indicator, meaning if you're in a recognizable pattern, a channel, a W pattern, a wedge pattern. I don't get too involved in flags, wedge, the triangle patterns, and there's a lot of patterns out there, but I pretty much look for the standard ones. So recognizable patterns, trend lines, stochastics, moving averages, 20, 50, 200. I also pay attention to the reversal candlesticks on the daily charts. You know, you really want to just, kind of measure any reversals or any kind of strength as it lines up with your areas. And there's other things. The pivot areas all help. But that's about it. I mean, you don't want to take, you don't want to put too many things on your plate in the market. There's a lot, you know, you want to be able to be a machine. You want to be able to see what the machines see. And this works on everything from the 1 minute to the 5 minute to the 60 minute to the daily. You know, that's my main chart periods. The Fibonacci's are great, but you know what? The Fibonacci's work just as well as a lot of different indicators. I love the Fibonacci. A lot of people trade with the Fibonacci's. If I remember to put the Fibonacci's up on a chart and I said, wow, that 50% retracement's lining up with this lower trend line, also with this rising moving average, I'm like, that's a home run for me. So if they are lined up, I'll use them. Sometimes I don't put them in there. How far back do you draw your trend lines on the 60-minute chart? Let me, as far as, you know, usually as far as, you know, don't make things too complicated. If a chart's going to look like a chart, you know, let it happen. Let the chart speak for itself. If it's, don't try to make it up, but you know, wait for it to happen. You know, that's going to give you, you know, like I said, we already put put Whirlpool together tonight. So you know, wait a few days, see if Whirlpool pulls back to 53, see what happens there. That's a good test right now. You know, and we'll come back and we'll talk about this in a few days. How much time will it take to gain 50% increase average seen in the second quarter was? Why don't you seem to play options? I just never got into options, and I got, you know, when I first got into, you know, options, I hated the decay. I didn't feel like the playing field was level for me, because you know, you can have a great setup and it just doesn't work, and you kind of you know, you lose your edge in options. And I just felt that, you know, if you're gonna make money, that's just the way I am. On Friday, you entered potash at the end of the day for a weekend hold. All right, let's go on to potash. Yeah, potash was a great setup. I mean, we've tracked potash. It's actually let me zoom in. I'm gonna try to get a better. That's potash with the split. Let me get a 60-minute chart up. All right. Well. Now Friday, what was Friday? Was that the 11th or 7th? Was it 7th? Yeah. All right, this was the main reason. I defined this. I'm pretty sure I put this out on the watch list. Or maybe it wasn't. Well, whatever. I must have talked about it, because here it is. We looked at the stochastic divergence. You see how the 60-minute chart pulled back, but the price level held way off the lows here? This was, again, a perfect level. So I think what we said was, I had this area set up here. Watch for a pullback. The stochastics are already pulled back, and I just took that entry. We started moving up. It was just a perfect entry. This is exactly what you're looking at. This was why. You know, this is exactly what we talk about. All right, looking at the pullback in the stochastics, we know that we're holding off for recent highs. We're trying to get the best price possible, and for the move up. So this was exactly the play on potash. 45 watts, yeah. Do you set the alerts on the bottom of the trend lines? You know what? There's a lot more I could do to make trading easier for me, to automate things for me. I do have some alerts that I use using my quote tracker system. But you know, it's always a moving thing. I don't put any trend line alerts in. I just scan, and I have you know, I have my notes in front of me each day, so what I'm looking at, and I kind of keep track of those. You know, when we go into you know, you go into the week, you want to be at least having some stocks in front of you that you want to be trading. You don't want to just start making it up as you go along, because you'll be, you know, you have no clue what's going on. So if you know you want to buy potash between $46 and $45 and it's there, you know, you got a good idea. You know, stochastics are pulling back. You feel good about it. You already feel good about it. And that's why, you know, you take those risk reward trades. 5-minute chart, I used to use the 5-minute chart a lot more than I do. Right now, because I do the show, you know, we stick really to the 1-minute chart. And I just gotten accustomed to the 1-minute chart. The 5-minute chart is a little slow for me. But I think the 5 minutes fine. You know, the 5-minute chart I use as a reference on the S&P 500 to gauge the market. You could learn a lot from the S&P, just the cash index, and you can see that's how we, you know, you could tell. I use this a lot because look at this chart. It's murdered with lines. I mean, we've ripped this chart apart daily, and one thing that really stands out is this is the 60-minute chart. So what stands out here on the 60-minute chart? The 60-minute trends, you know, very tight trends. But once you broke down there and once the stochastics rolled over, you established a new trend to the downside. And remember, this is, you know, 2 to 3 day moves. So once you establish that and you see that the first day, there's a good chance that the momentum is going to carry that down unless you see the divergence. But that's what we're waiting for tomorrow to see if we actually start to roll over. We haven't really officially broke that trend line, but this looks like it's a setup. And again, that's why I used the 60-minute. I mean, it's when you look at something like that and you say, wow, each time I could have pretty much looked at a break of the trend line and kind of held on and trade it. And it's not something you want to trade the futures with, you know, because you probably require a pretty big stop, a wide stop, but to know market direction. You know, the market direction is so important. You know, when you see a short-term pullback, it's going to be harder to take the longs into that unless, you know, you're prepared to pick up, you know, stocks at a certain level on the pullback. But this is important. I use the 5-minute chart a lot on the S&P. Here's the S&P today, and again, the stochastics on the S&P and a bullish indicator. This is one of the best signals. Is the 1433 stochastic and a very bullish trend. Even though it's not moving a lot here, that's still very bullish to see the momentum, but not the stock dropping off. That's telling us there's a tell that there's going to be a pop, and we continue to pop. And here's you know, that's the end of the day. A little selling, but it looks pretty good. 2 minutes left. Okay. Well, that was a pretty long webinar. I want to wrap it up. That's what we're going to do. We're actually going to wrap it up. And I appreciate Jesse and the guys at Speed Trader, which great firm, and so happy to do this for you guys. And I hope you guys out there enjoyed it. I mean,
John.
Yeah.
I just want to say, yeah, thank you, man. I really appreciate taking the time out. The demand for this webinar was so huge that we actually maxed out the GoToMeeting, you know, chat room. So that's why we had to go and broadcast it on your website. But the demand was massive, and I really appreciate you taking the time out and sharing some of your expertise, and hopefully we can do more of these in the future.
Yeah, no, I was great. You know, I just want to tell you, you know, I'm very passionate about this. I think, you know, people could be successful trading if they have the discipline, and there's a you know, there's definitely a way of doing this, and sometimes I get overly passionate about it, but when you see it, and you need to pound it in there, you know, you need to bang the table on some things, you know. I get frustrated sometimes. You go on, watch on, well, I'm not going to go into a tangent live on your webinar, but I'm happy to be here.
Oh yeah, John, thanks very much. And we're going to be recording this, so you could tell anybody that missed the webinar. We're going to be putting it on our website under webinars and seminars. And again, thanks, John, and everyone over at DayTradingRadio.com. You know, part of the
Thank you, Jesse. Thanks everyone out over there, and thanks everyone who came out and visited or you know, performed. I wish everyone got in. And Jesse, maybe I'll see you this weekend, maybe.
All right, yeah, sounds good, bud. I'll talk to you soon. Thanks, guys.
Thanks, everyone. Excellent. That was fun. I'm done. Hope everyone enjoyed it. What was that? Yeah, I'll do that. Hey guys, thanks in the chat room there. I do see it in the chat room. You know, it was good. It was good doing that. I'm passionate about just, you know, going back and going over some of the basics there. I think those basics, even though that, you know, you hear me talk about all this stuff all the time, you know, so it's maybe not something that's new to you guys, because I kind of preaching this all the time, but to be able to do it and kind of focus in and not have to worry about the markets is a little refreshing too. So we didn't have to worry about the markets and kind of took that for a ride. And I'm glad. I'm gonna just turn off the show here, and that way I record it on my side also, so we have it for rebroadcast. And I'll talk to everyone tomorrow morning. I hope everyone has a great. Hey, thanks everyone. I appreciate that. These things are always kind of nerve-wracking. You don't have, it's public speaking, but I think I got a little experience. I just have to pretend that no one's out there. It's like what I usually do. Oh, no one's listening to me. My pirate radio days. No one's listening out there. I get to talk to myself, sit in my underwear, have a margarita. If they only knew, this webinar was bottomless, in combat. I can't tell you the puddle of sweat and I'm sitting in right now. Oh, I went too far with that one.
How come I'm here?
Oh my God. I went way too far with that one. I'm not on the air?
Oh, you are.
I am on the air. Always on the air. All right, let's put the futures back up. We'll leave the futures up overnight. There is a show tonight. Now wait, you're mumbling here. Who's show tonight? Rainmaker.
Rainmaker, yeah.
I know more than you know. Thanks, Paul. The futures here pulling back under 1200. The back filled down a little. Oh, you know what? Let's go to the screen. Hey, tech student, thanks out there in the basement. Thanks so much. Rainmaker's not defined. All right, done. Lock another one up. All right, I'm going to actually, I'm going to turn this site off just for a second. It's going to record what I just did. How long were we on for about? That was 2 hours? No. 4:30 to 5:30. It was a 1 hour thing. I would have went longer. Jesse was shutting it down. I think he had a time limit. I think GoToMeeting was timed, and he was like, "We got 2 minutes. Let's wrap it up." Yeah, it was a surprise broadcast. Surprise broadcast. Yeah, there will be 7. There's going to be access to that. Let me just shut this off. It's going to save it in the back end, and then we'll post it on the site. All right. And the guys out there from Speed Trader, if you're new to the site, appreciate it coming over and checking it out. I'll be right back. Play you some music and cover the futures.